Hello, my name is Brehon Mills, and I would like to welcome you back to the channel, where not only do we talk about great stocks, but we also talk about great books. Listen, family, I am excited that Friday is finally here. Get a chance to rest and relax, recuperate, get ready for the next week. We've had a solid week this week, great week. And if you've been watching my videos, I stated that if we have a great, Monday, Tuesday, Wednesday, Thursday, we're not going to have a great Friday. It will be some sell off going on. People will take profits. Okay. The market just doesn't act that way. You're not going to have 5 green days in a row. You're not going to have 5 red days in a row. We're going to have a green or red day mixed in there somewhere. All right. But I saw the article that came out on ChargePoint, the after earnings review, and the news was very, very favorable, but it was one of those positions where all of the money is made during a run up. Then after the great news of earnings, we have a drop in price. This happens a lot with stocks, and it also happens routinely with Apple. All right, if you ever pay attention to Apple stock, it has a nice strong upward trend. Then once they come out with their earnings, news is great, guys. There's a sell-off, right? There's a sell-off that happens, and investors, they wait, get back in, add more profits. All right, now this is the article that came out after the earnings report yesterday for ChargePoint. Now, fiscal year 2021 revenue of 146 million exceeding forecast. Completed business combination with Switchback Energy Acquisition Corporation began trading on the New York Stock Exchange on March 1st, 2021. Increased total cash balance to $615 million at the close of business combination to fund growth initiatives. $615 million of cash on hand. ChargePoint Holdings, a world-leading electric vehicle charging network, today announced fourth quarter and full-year fiscal 2021 financial results. Last year, the global EV sector continued to show strength as EV sales grew despite a slow overall market, bolstered by policy trends that continue to accelerate the shift to electric in North America and Europe, said Pascal Romano, President and CEO of ChargePoint. In 2020, we continue to strengthen our market leadership position and expect our growth to be fueled by dozens of new EV models anticipated in 2021 across a wide range of segments and price points. With a strong balance sheet and a capital-light business model, ChargePoint is well positioned to create shareholder value through broad attachment to the electrification of mobility for fleet and consumer vehicle markets. All right, great news for the fourth quarter that ended January 31st, 2021. Revenue was $42.4 million compared to $43.2 million in the fourth quarter of the previous year. For the fiscal year that ended January 31st, 2021, revenue was $146 million, up from $144.5 million in the year prior. All right, now this is all great news. ChargePoint is definitely a company that's positioning itself to do some incredible things. They are positioning themselves to increase their revenue year over year. So we're going to continue watching it. And what I was actually looking to do today was to take a position and possibly play some call options. I wanted to see how the first hour was going. But, just like I mentioned with Apple, after the great news, it was a sell-off. All right, so ChargePoint today is down currently almost $3 a share, where yesterday it closed at $30.43, and today it opened at $26.41. $26.41. All right, now we are back up to $27.40, so we're going to have to wait and see how things operate. And what I like to do, I like to read candlesticks, and I do enjoy making my trades based on what I see, how the candlesticks and how the stock is reacting on the 20-day moving average. All right. Now I love using the 20-day moving average to jump in and out of stocks. And I also like using the candlesticks. Now, if you take a look at the candlestick here, we have a strong downtrend. Then we have at the bottom of this downtrend, we have the hammer candle. Now, if you've been following my channel, you know the hammer candle is a sign of a potential reversal in pattern. All right. But there are one or two things that need to happen. We need the following candle to close above the hammer candle or trade above the hammer candle, depending on the type of trader you are. Some traders, once they see that the price is above the previous day hammer candle, they jump in. Some like to wait for the day to end and then place their trades based on trading above or closing above that hammer candle. All right. And we had that. All right. We did have trading above the 20-day moving average. So it's a great opportunity to jump in and ride this thing up from 26 to 30 bucks. But again, we had earnings and we had a pullback. All right. And it appears that the energy industry has pretty much operates as one pattern. So once one fall back, most of the others just kind of follow suit. All right. So I was looking at that one. I also was taking a look at FCEL. Same thing happened. All right. We did have a nice solid downtrend. All right. And we had a hammer candle, but the following candle was trading below. So that wasn't an indication to get back in there. The next day we was above that hammer candle, which does represents the opportunity to get back into this play. And we could have rolled this thing up. All right. Now yesterday it closed at 1836. And today it opened at 1715. All right. So again, we did have a slight pullback. So we're going to continue watching it. Now, let's take a look at Blink. All right. Same thing. Strong downtrend. We had the hammer candle here, trading below the hammer candle, which isn't an indication that we need to get back in. Trading above this hammer candle, which is an indication that we could possibly jump back into this stock. All right. And we could possibly ride this thing on up. All right. But again, we did have a slight pullback. Now, my strategy, what would I do next when it comes to these stocks right here? All three of these. Now, I will pay attention to the 20-day moving average. All right. Once I see this stock move above the 20-day moving average, preferably the first green candle. So back here, now if I would have saw this green candle move above the 20-day moving average, I'm getting in and I'm riding this thing all the way up. First red candle, I might sell depending on how much I profited. But same thing here. If I see one green candle above the 20-day moving average, I might jump into this stock. All right. I might jump in and set my stop price. For example, so let's take a look at this stock here. Let's take a look at this position here. So I would say, hey, I want to jump in, place a trade or a call option. First green candle above the 20-day option, 20-day moving average. So I jump in here at 41.20. I will place my stop at the bottom of this wick right here, which is a low of 38.80. All right. So again, I'm trying to minimize the amount of losses I would take. So I would jump in here and I will ride this thing up to $45, $46. All right. Now, as I continue riding this price up, I increase my stops. So whereas my stop was at 38.80, once I hit 44 bucks, now I could set my stop back to possibly $42 or $43, $1 below, as I continue making money and riding the uptrend up. All right. And no, that's one of the strategies I like to use. Very easy. Same with fuel cell. The first, the first green candle above the 20-day moving average, I'm in, and we're going to ride this thing all the way up. All right. We're going to ride it all the way up, and we're going to set our stops. So I'm waiting for the next green candle and seeing, how far does it open up. Now, if it jumps up $4 or $5, that may be a little too much for me, but if it jump up to, $18 or something like that, I may place a call option and try to ride this thing up. All right. And the same with Blink. Same thing. One green candle above the 20-day moving average, I might jump in and see if I can ride this wave up, set my stops. So if it do fall below the candle that's below that 20-day moving average, automatically sell, cut my losses. I live to fight another day. All right. And that's what we want to do. See, you can chase the dips and buy dips, or you could just sit on cash, be patient, and once it go above the 20-day moving average, a nice upward trend is established, then you could jump in and make money. All right. So it all depends on what you want to do. You develop a style that's based on your psychology and what you're able to withhold or withstand. Me, I like to ride the trends up. All right. I like to win. I don't want to buy positions when I'm down and I'm continuously going down, unless it's a long-term investment. Now, if it's a stock that I plan on being in 5 years from now, 10 years from now, I'm buying and I'm holding. I'm not worrying about, the cost right now, because I'm thinking, 5, 10, 15 years down the road. But when I'm in a trading account, trading positions, I'm looking for opportunities to win. All right. And I hope you are too. Now, again, I hope this video added some value to you. If it did, hey, please leave a like. If this is your first time checking me out, hit the subscribe button and keep coming back to more wealth building information. Peace.